Hello, everyone. It's great to be here at the Upbit Developer Conference. Thank you, Sergu, for inviting. It's a great event. So today I'm going to talk about Bitcoin largely. So my talk title is Bitcoin and Layer 2 Technology Improvements. My name is Samson Mow. I'm the Chief Strategy Officer at Blockstream. Previously, I was the COO at BTC China, or BTCC. It's one of the largest exchanges and mining pools in the world. And before that, I was at Ubisoft working on games. So a bit about Blockstream. We are a blockchain Bitcoin infrastructure company. Largely, all the work we do is around Bitcoin, making Bitcoin more robust, augmenting Bitcoin with new technology. We were founded in 2014 based on the Sidechains white paper. And our CEO is Dr. Adam Back. He was mentioned in the white paper from Satoshi Nakamoto. And he's the inventor of Hashcash, which is a proof-of-work system to prevent spam. We are about 60 people, 60, 70 people now, and we have offices around the world in Victoria, BC, San Francisco, and Milan, and some smaller satellite branches. And we have a lot of mathematicians and cryptographers. We're very heavy on R&D. And my role at Blockstream is primarily to focus our R&D into productization. So I oversee product development, marketing, and BD. So some of our flagship products include Liquid. It's an inter-exchange settlement network that's used to link together different crypto exchanges, market makers, brokers, and financial institutions. And I'll talk heavily about that in this presentation. We also have Blockstream Green. It's a mobile wallet. And we recently announced Blockstream Mining, which is a hosting service that we offer for Bitcoin mining. And we have about 300 megawatts between Canada and the US. And we have Blockstream Satellite. Some of you may have heard about it. It's a satellite service that's broadcasting the Bitcoin blockchain around the world for free. So right now, if you set up a satellite dish, you could receive the Bitcoin blockchain. It also has a messaging service built in too, where you can send messages over the satellite network. So it's a censorship-resistant communication system, which also has the benefit of helping keep the Bitcoin network in sync. And we also have cryptocurrency data feed. I'll touch on that in our talk, as well as Elements. Elements is a blockchain platform. It's a fork of Bitcoin, and Liquid is actually built on Elements, so it is also a fork of Bitcoin. So we do a lot of open source contributions at Blockstream. We have one developer full-time working on Bitcoin Core. We have Explora, which is a block explorer for Bitcoin and Liquid. And Lightning, I'll talk about that in my talk as well. Simplicity, it's a smart contracting language. And Miniscript, which is a simpler method to do Bitcoin script, which I'll also talk about today. So first, let's talk about Bitcoin. I think everyone in the room knows about Bitcoin. A lot of people don't know that Bitcoin does support smart contracting because it's not marketed, and Bitcoin doesn't have a marketing team behind it. But actually, Bitcoin is the first cryptocurrency that has smart contracts. And also, Bitcoin is actually, I wouldn't say it's a DLT. Bitcoin is just Bitcoin, and then there are other blockchain projects which are DLTs. But Bitcoin is kind of in a league of its own. It's an uncensorable digital gold. So just quickly, what is Bitcoin? It's the first reserve cryptocurrency. All other cryptocurrencies kind of follow along with Bitcoin. When it goes up, other cryptocurrencies go up, and when it goes down, they follow. But typically, Bitcoin is moving on its own. It's also decentralized, so anybody can participate in the Bitcoin network without having to talk to a central authority. You can mine Bitcoin without having to join any consortium, and you can transact Bitcoin without reliance on any third party. It's also battle-tested. It's been in operation for 10 years now, and it's secured by 86 exahash of proof of work, and maybe the power used to power a small country. So it's very secure and reliable. And it's also very lightweight, which means if you have a small laptop computer or old computer, you can always run a Bitcoin core node and help to secure the network. So some of the new tech that's coming out in Bitcoin includes Schnorr signatures, Taproot and Graphroot, scriptless scripts, and Miniscript. But these are mainly optimizations of signature technology, and a lot of them are advancements to help with scaling. So Schnorr signatures replaces ECDSA, which lets us do signature aggregations, which generate smaller transactions. You can batch your signatures together. And we have Taproot and Graphroot, which improve privacy of smart contracts in Bitcoin. And scriptless script is mainly a way to do smart contracts and enable cross-chain atomic swaps. And Miniscript I'll talk about a bit later. Another interesting thing that has seen a lot of traction lately is the Lightning Network. So this is a layer 2 scaling solution for Bitcoin, which allows for instantaneous and near-free transactions. So it allows Bitcoin to become a payments network. So a lot of people were using Bitcoin in the early days to do payments, but Bitcoin is not a payments layer. It is a settlement layer. But Lightning allows Bitcoin to be used for payments. So you can use Bitcoin now to pay for things in a store, pay for your coffee, or pay for micro or nano transactions, machine-to-machine transactions. So Blockstream has one of the main Lightning implementations. Our implementation is called C Lightning, and that's primarily led by Rusty Russell and Christian Decker from our team. And we've had a lot of growth of Lightning over the years. So we've seen parabolic growth since we launched on mainnet in early 2018. So Lightning is decentralized, so there is no real timeline for when things happen. Like, there's no official launch date. But in early 2018, all of 3 main Lightning implementations, C Lightning, LND, and Eclair went beta. So we called that launch. But we've seen a lot of growth. This is the channels of the network. So number of open channels is the yellow line on the graph, and then capacity or Bitcoin is the green graph. And you see it tapering off a little bit here, but that actually doesn't mean that the network growth is slowing, because recently we have an advancement for private channels or unannounced channels. So people can take advantage of that privacy functionality to not broadcast their channels to the network. So we see fewer channels publicly advertised. And the number of Bitcoin pegged into the network is actually dropping. But you have to remember that Bitcoin price is going up over time. So the total capacity of the network has actually more than doubled in this time period. So some of the other advancements in Lightning include external channel funding, dual funded channels, which allow for 2 parties to both fund a single Lightning channel. So before this, you'd have to open a channel and it's lopsided. It's your own funding. But now you can have 2 parties, so you can both contribute funds to a single channel. And we have improved privacy and plugins. So plugins is a major addition to C Lightning, which allows you to create your own plugin in any language and run it with C Lightning. So Liquid is a primary point of my talk today. So Liquid is a inter-exchange settlement network. It is a sidechain, but it's the first commercial production sidechain anchored to Bitcoin. So what it allows for is rapid Bitcoin transactions. So when Bitcoin sees congestion, and it can see congestion for a multitude of reasons, such as increased usage, trading, or just people spamming the Bitcoin network, anchoring data, or anchoring anything with open timestamps or timestamping data, it can slow down. But Liquid is a separate chain, and it is a single-purpose chain, so it is for financial transactions only, which helps it in terms of being more scalable. So some of the advantages are fast final settlement. So we can have a full settlement in Liquid in roughly 2.5 minutes. Liquid has 1-minute block times, and depending on when your transaction hits the network, we recommend taking 2 transactions, because we can actually have a 1-block reorg in Liquid. So roughly 2.5 minutes for full settlement. We have confidential transactions. So every transaction in Liquid is confidential, meaning you cannot see the amounts of the transactions. They're blinded. And you can have secure tokenization. So you can issue assets on the Liquid sidechain, representing things like fiat stablecoins, other digital assets. And the biggest benefit for exchanges is one integration, many assets. So you just run one Liquid implementation, and you can access all the different assets issued in Liquid, which means less overhead and development time for an exchange to support different tokens and assets. So how it works is you essentially need to lock up a Bitcoin on the Bitcoin main chain before you can unlock the Bitcoin in Liquid. And what that means is there cannot be more Bitcoin in Liquid than exist in Bitcoin. So there are 21 million Bitcoin in Bitcoin on the Bitcoin chain, and there will only be 21 potentially in the Liquid sidechain. So the ticker for Bitcoin is BTC, and we call Liquid Bitcoin L-BTC to represent it differently. So Bitcoin is pegged into Liquid through a 2-way peg. We require 102 confirmations on the Bitcoin main chain, and this is just to avoid reorgs. So there can be deep reorgs on Bitcoin potentially. It's grown less probable now, but still, it still happens. So we ask for 102 confirmations just to be safe. But pegging out from Liquid back to Bitcoin only takes 2, and you have that finality. So when you peg in Bitcoin into Liquid, you actually take advantage of the properties of Liquid, which is faster block times and confidential assets. So how Liquid works is we have functionaries which are securing the network. So Bitcoin is secured by miners, but in Liquid we're secured by the functionaries which are running these functionary boxes, which is a 1U rack server that they put in their vaults. And these servers are extending the Liquid blockchain by generating blocks. And they're generated every minute. So one of the functionaries will propose a block, and then if 2/3 of the federation sign the block, then that is a valid block, and the transactions are added to the Liquid sidechain. So for Liquid, we also have issued assets, which is a very interesting functionality. So with something like Bitcoin, you can actually have assets, you can kind of have assets on Bitcoin using things like colored coins. And on protocols like Ethereum, you can have a token, which is largely what Ethereum is used for, but they're using a complex JavaScript-like smart contract to create a token, which opens up all sorts of interesting attack surfaces. But for Liquid, every asset in the network is native to the chain. So if I issue a stablecoin on Liquid, it's at the same level of security as, say, Bitcoin. So I can take advantage of all the wallet software developed around Liquid, hardware wallets that support LBTC or Bitcoin, and secure my token that way. And we recently, in the last few months, announced that we have Tether now on Liquid. So that's the largest stablecoin currently, and they've issued on Liquid to take advantage of things like confidentiality. So this is roughly how the world interacts with the Liquid Federation. You connect to the network over a bridge node, and something like Blockstream Green, our wallet, will connect to a bridge node and access Liquid and broadcast and receive transactions. Or you might have a Liquid client or a third-party Liquid wallet. So for Bitcoin trading, there are currently a lot of problems, and I think Liquid addresses some of them. If you're doing OTC trading, you have to deal with counterparty risk. So OTCs usually require you send the money first, and then they'll fill your order and send it back to you, and that introduces counterparty risk. And there are middlemen too, so they'll take a cut on any transactions. And there is also the issue of slow settlement. So Bitcoin is a settlement network with roughly 10-minute block times, but it can be longer because there is variance in mining. So you typically want 6 confirmations on the Bitcoin main chain to consider a transaction settled. But with mining variance, you can have a block come out maybe in an hour. I've seen it go up to 3 hours, and sometimes it can be faster. But on average, it's about an hour for settlement, but it can be a lot more, which is frustrating, especially if the network is congested. And there is limited liquidity. So you're limited to trading partners that you have a relationship with. So if you're doing OTC trades, typically these are large dealers that have their user base, and they can dictate the terms of the trade. So with Liquid, we can quickly move funds because we have faster block times than Bitcoin, but you're still transacting Bitcoin essentially because you can always peg out through any of the Liquid members. And you have confidentiality. And you can also secure your funds off exchange. One common use case right now for trading, leaving coins on exchange, is that traders want to be able to trade it at a moment's notice, so they leave their coins on exchange, which increases risk for both sides. So the exchange has to deal with holding more coins than they otherwise would have wanted, and the users have to trust another party with their coins. But if they're using Liquid, they can move coins on and off exchange very rapidly. So they can move it off exchange to their own wallet, Blockstream Green or a hardware wallet, and they can move it back on in a minute. And it's reliable, so they know that they won't have to deal with the variance and 6 confirmations. So there are also new use cases with Liquid, which are atomic swaps. So these are single chain atomic swaps that you can do with other assets. So like, say, Liquid Tether and Liquid Bitcoin. So you can do OTC trades. Right now, a lot of the larger OTCs will just require you to treat them as a trusted counterparty and send your coins to them first. But with Liquid, you can actually do these atomic swaps. So you can trade with people you don't necessarily trust because we can construct an atomic trade that executes when both sides sign. So that means you can do more peer-to-peer trades, and you can also have non-custodial exchanges emerge using Liquid. So this is just comparing different swap types. So in Liquid, they're faster, 2 minutes. Cross-chain swaps would be, say, between Litecoin and Bitcoin, and that's roughly an hour because you want to have 6 confirmations. And smart contract swaps would be, say, something in Ethereum, which also would require about an hour of confirmations. And those are just the different benefits. So Liquid is lower fees, less complexity, and more private. So this is just an example of how you do an atomic swap. It's just a swap that occurs simultaneously. So it only happens if both sides sign, and then it happens at the same time. So there's zero counterparty risk. So you can see the transaction structure is just, overall, an atomic swap is just a single transaction. So in this case, you have Alice wanting to, she has Liquid Tether, but she wants Liquid Bitcoin. So she'll propose a trade to Bob, who has Liquid Bitcoin and wants Liquid Tether. So I'll break down this transaction really quickly. So Alice will first construct her side of the transaction and say, I want Tether, I have Tether and Bitcoin, I want Bitcoin. And then she'll send that transaction to Bob, who fills in the other side of the trade on their agreed amounts. So Bob will say, okay, I'll give you some Bitcoin and I want this much Tether. And he'll also pay the fees because he has Liquid Bitcoin. And then he'll send that transaction back to Alice, who signs that transaction. And then in this case, Alice will broadcast that transaction on Liquid, and then the transaction is executed. So they didn't need to trust each other to create this transaction, and there is no counterparty risk. So another thing that we can do with Liquid is peer-to-peer derivatives. And we recently did a test with one of our partners and Liquid members, which is Crypto Garage. It's a Japanese company focused on crypto finance. So we constructed a trust-minimized forward contract. So that's just a bilateral agreement to buy or sell an asset at agreed specific price in the future. So we collateralize on-chain. I think we did 0.16 Bitcoin or something like that when Bitcoin price was about 5,000. It's risk minimized because once you constructed the transaction, there's no way to cancel it. And we oracleized it as well by getting price data from the cryptocurrency data feed. So this is actually a product that we built in conjunction with ICE. ICE is the owner of New York Stock Exchange and Bakkt. So we do the heavy lifting, and they're marketing and selling this feed. But we took the price from this feed and used it to complete our transaction. So this is just breaking down what we did. I'm running out of time, so I'll skip ahead. We constructed the transaction, posted our collateral on chain. Blockstream went long because we're long Bitcoin, of course, and Crypto Garage went short, and they ended up taking the trade. So they made about $230 on the trade. So I talked a bit earlier about Bitcoin and smart contracts, but we can actually do a lot of more interesting smart contracts and better smart contracts now with things like Miniscript. So the Miniscript is a scripting language that's human readable, and it's meant to simplify Bitcoin script, which is based on another language called Forth, which is meant for telegraphic transfers. Or it's a very old language created in, I think, 1960 or something like that. But it's human readable. It makes Bitcoin script easier to use. So you basically create your smart contract with Miniscript, and it compiles down to Bitcoin script. And it makes it a lot less error prone, and you can check and see that your smart contract actually does what you think it will do. And it also has a reduced attack surface, because when you're constructing smart contracts with Bitcoin script, there are a lot of possible errors. If you see some transactions on Bitcoin where people reverse the fee, the miner fee, and their transaction and pay the miners 10 or hundreds of Bitcoin, that's an example of people messing up Bitcoin script. So Miniscript helps with that. We also have Simplicity, which is developed by a researcher at Blockstream, Russell O'Connor. And this is meant to be a full replacement of Bitcoin script. But it's a formally verifiable language which allows you to essentially verify that a smart contract does what you think it will do. And this solves a lot of the problems with complexity in, say, Ethereum smart contracts, where they have no idea what the smart contract does. And you end up things with a DAO hack, which is very bad. And you have higher level languages that compile down to simplicity. But simplicity is very simple. We actually have a t-shirt available on our Blockstream store, which shows the language. It's the back of the t-shirt. So the entire language fits on the back of a single t-shirt. So there's a lot of things that we're doing to bring Bitcoin and Liquid to the mainstream. We have Liquid Securities, which is built on Liquid. It's a way to issue and manage tokenized securities. And you can set up compliance rules. We have a few projects and companies that are currently being worked on, developed on Liquid Securities. This will launch in Q3 this year, so it's very exciting. We announced this at Consensus last year. Another thing is that we recently announced Lightning is now functional on Liquid. So what that means is you can construct a Lightning network on Liquid. That means LBTC can have its own Lightning network now, and that allows for swaps between Bitcoin Lightning network and Liquid Lightning. But the more interesting part about this is you can have a Lightning network on top of a Liquid asset. So as I mentioned, we have Tether on Liquid. And with Tether on Liquid, if you have enough liquidity, enough people holding Liquid Tether, you can construct a Lightning network on Tether. And what that means is you can now use a stablecoin to do retail payments. You can go to the store and pay for coffee with Tether. But other things you can do are in-game currencies, streaming payments for access, say for Wi-Fi, like very small transactions per second. And you can have instant security token settlement. So these are just some of the things that show the different roles of Liquid and Lightning. So I think Liquid and Lightning are complementary technologies. Liquid is primarily used for trading, whereas Lightning would be used for more retail and small payments. You still have a settlement time for Liquid, whereas with Lightning it's instant. And transaction fees, we still have transaction fees in Liquid because it's a DDoS measure. We want to charge for transactions so the network doesn't get spammed. But for Lightning, it is instant because everything is off-chain. There's no blockchain for Lightning. And you can kind of go through. I want to leave some time open for questions. So for Liquid on the go, we have Blockstream Green, which is our mobile wallet. And that already supports Liquid assets. So you can issue a token in Liquid, and it can be accessed by your user base on Blockstream Green. And Blockstream Green does support hardware wallets like Trezor and Ledger. And it's available for Android and iOS. But the interesting thing about Blockstream Green is that it is a multi-sig wallet. And that means that Blockstream holds one key, you hold one key. So you use a second factor authentication to approve a transaction. So that makes holding issued assets on Liquid much more safe and reliable for your end users. That's just a UI showing the different issued assets on Blockstream Green and how they appear. But Liquid is the base currency of the Liquid sidechain. So when you're transacting an issued asset, you're actually using LBTC to move it. So this is just a diagram showing the Liquid ecosystem. We have Liquid as layer 2. So Bitcoin is layer 1, Liquid is a layer 2. And then different tools that are available. So everything is open source up there. Liquid Core, Green SDK, LibWally, these are things you can use to build mobile applications. And we have the explorers. We have an asset registry to register assets issued on Liquid, as well as simplicity and swap tools. And then we have other things that are built on top. So one thing there is SettleNet, which is developed by Crypto Garage. It's meant to be an OTC platform that lets people do trust minimized swaps on Liquid. So one thing that's changed recently is we're repositioning Liquid to be layer 1.5 because we can now have Lightning networks set up on top of Liquid assets. So whereas previously we would say Liquid is layer 2, Lightning is layer 2, we've kind of moved Liquid down a bit to better represent how it interacts with Lightning and Bitcoin. So it sits between the two. And I think you could safely say that Liquid is kind of an interface to make things like digital assets or crypto assets compatible with Bitcoin. So these are some of our Liquid members. 2 of our Liquid members are actually Korean exchanges. We have GoPax and Coin1. But we have a lot of members in the network from different segments of the cryptocurrency industry, like exchanges, trading desks and brokerage, infrastructure, and wallets. So Liquid in the industry, these are some breakdown of the different member types we have. So for a wallet, we have Blockstream Green. OpenNode is a payment processor, so they're also a Liquid member. Exchanges, we have Bitfinex, BitMEX, OKCoin, Huobi, and several other large cryptocurrency exchanges. And then for custody, we have Zappo as a member. And for token issuance, TokenSoft can help with issuing security tokens on Liquid. And we have one mining pool in the network as well, which is Poolin. So their use case is that they're going to allow for smaller payments for their miners to happen over the Liquid network, so they can send directly to an exchange to cash out. And this is just an example of asset issuance and how different other chains handle different asset types. So Liquid handles securities. You can read the chart. I want to leave more time. But we handle everything, and we think it's more private than any other chain. So that summarizes my talk. Largely, it's to show you guys what is being built on Bitcoin and Liquid, and interesting things you can do with smart contracts in the space. And the exciting part is really Lightning networks and being able to do retail payments for crypto assets. And I leave you with our slogan, don't trust, verify. Thank you very much.
So thank you, Mr. Mow. So now we'll take the time to answer some questions from the audience.
Right.
So we have a Q&A time. So 샘슨 모우님께 들어온 질문 중 몇 가지 소개해드리도록 하겠습니다. 첫 번째 질문입니다. What is the difference between the peg of Liquid and the peg of Cosmos? And Binance DEX is also providing the similar user experience. So what is the difference?
So the peg for, I guess any peg is roughly the same. It's just how it's secured. For Liquid, it is secured by the federation. So the functionaries are securing the peg. So largely, you have to trust that the functionaries of Liquid are honest. I'm not too sure about how Cosmos secures their peg. For the Binance DEX, I think it's largely they're not pegged to anything. It's just a decentralized exchange where I think you have some custody through your keys and creating transactions with them. Hope that answers your question.
Okay, thank you very much. And the next question is, the Liquid transaction is implemented in a private way. So according to the FATF, all process is recommended to follow KYC AML. And the grace period is given till June 2020. So how do you think to resolve this issue?
So for Liquid, we consider it just to be another state of Bitcoin, much like Lightning is another state. So if you say Bitcoin is ice, then Liquid is just liquid ice, which is water, and then Lightning could be a gaseous steam or water vapor. But for us, it's just all Bitcoin. So I don't think that that would apply to Liquid, and it certainly does not apply to Bitcoin because there's no way to enforce that. In terms of KYC, you don't need to be KYC to use Liquid Network because you can just download the client and run the software yourself. You can peg in yourself. Pegging out, you have to go through an exchange. So if you want to exit the network without using, say, an atomic swap, and you want to withdraw from an exchange, then you do have to be KYC'd on that exchange.
Okay, thank you very much. And the next question is, as a developer, I would like to understand the Liquid, and with the use of the Liquid, I would like to develop service. But for me, as the mid-level developer, how long does it take to study to develop service?
Well, I guess it depends largely what kind of service you want to build. There's already a lot of interesting things coming up on Liquid. A lot of people are playing around with atomic swaps and platforms to do that. Crypto Garage is one example, but there are a lot of tools available. So we have libwally that you can use. It's a library if you want to build something. It just makes it a lot easier to interface with Liquid. But if you want to just issue a token, it's really easy. You just download Liquid Core, run Liquid Core, run a command, and you've issued an asset. So you can bypass a lot of the complexity of, say, making a smart contract in Ethereum for the purpose of issuing a token.
And the next question is, there are many trials to overcome the weak point of Bitcoin. However, there is no such project which has a power as Bitcoin. And I think the Liquid project can be forgotten as well. So what do you think about it? Sorry about to ask these questions, but
I don't really understand the question. Can you try again?
okay. There are many trials to overcome the weak point of Bitcoin. However, there is no such competitive project as much as Bitcoin's. And Liquid project is also one of them. So I think the Liquid project can be forgotten.
Okay.
Sorry to ask
Well,
this question.
Well, what I guess it really comes down to what you think the trials of Bitcoin are and what challenges Bitcoin has. But Liquid is just a mechanism for moving Bitcoin faster. And as long as people want to trade Bitcoin, I think there is a very strong use case for Liquid. So you can still have congestion with Bitcoin. Things have gotten a lot better. If your criticism of Bitcoin is number of on-chain transactions, then it is limited in that respect. But Bitcoin is a settlement network, and it's meant to move large chunks of money. And if you look at the amount of money that you can move on the Bitcoin network, I think it's in the billions a day, hundreds of billions a day, if you total up all the transactions. So individual transactions don't matter. But still, the Bitcoin network can be congested if a lot of people are trading, like we have a massive bull run, and everyone is overpaying fees, then fees can go up. So Liquid does solve that problem, which is you can peg into Liquid, trade within Liquid, and any disruptions on the main chain don't interfere with trading. So I guess that would be my answer.
Yes, I'm strongly sure that the Liquid project will win the market. And the next question is, Chinese government has announced to release CBDC soon, while your project allows Tether to be used in real life for payment. What kind of impact would the release of CBDC give on your project or the current cryptocurrency market in general?
So I think the central bank currencies don't really impact things like Bitcoin. You can issue, for Tether, they're issued on multiple chains. They're on Omni first, and then they're issued on several other chains. It's just every chain has its own unique properties. And we think Liquid has the best properties of every chain that Tether is issued on right now. But being able to use Tether for retail payments, you could use any stablecoin for retail payments. But it kind of is different because Tether is kind of, I guess it's kind of a more decentralized stablecoin, whereas I think there will be a lot of controls put in place for central bank issued digital currency like that. So I think the use cases still would be largely different. You can go to Hong Kong and go to the money markets on the street, and they just have Tether listed up there alongside US dollars and Sing dollars and Hong Kong dollars. And it's kind of hard for any stable currency to get that level of awareness and adoption in the marketplace.
Okay, thank you very much. And the next question is, Bitcoin, the coin of the Bitcoin is made by mining, and according to your lecture, the Liquid coin is made as much as the Bitcoin. So how can we do mining, or isn't there any mining?
No, there's no mining in Liquid. It's DMMS, Dynamic Membership Multi-Party Signatures. So that means that Liquid is not dynamic dynamic membership. Bitcoin mining is dynamic membership, so anyone can be a miner and mine and generate a block, in theory. So for Liquid, it's the set membership, and it's just pegging in Bitcoin that already exists that is generated by the miner. So you're not actually generating Liquid Bitcoin, you're locking up Bitcoin to use it in Liquid. And the only time that Bitcoin is created in Liquid is when you lock up Bitcoin. So there's no mining involved, it's just digital signatures from the Federation that generate blocks.
Okay, thank you very much. The answer was really helpful for the questioner. Thank you.
Okay.
So you can return to your seats. Thank you very much. We will wrap up the Q&A session here.
Thank you.
네, 시간 관계상 여기서 마무리하도록 하겠습니다.